I'll start the stream soon. Just gotta grab the link. Doesn't look like it's connected at all. Confused. I'm streaming, but it's not popping up on my YouTube channel. Ay, ay, ay. There you go. There you go. All right, let's get started then. People should be flowing in. I just made a video on this book that I started reading, The Art of War, or I've been reading it for a while now. Just like piecing through it and applying some of the stuff that's in this book to trading, because it's kind of crazy. Like Sun Tzu talks about like his troops as like how we're supposed to think about our capital. Like some days or some wars, you don't want to fight a battle. You should win it without any conflict. To preserve your troops is the same way that we should preserve our capital. And yeah, there's just so much lessons from like books that you wouldn't think would give you lessons on trading. Most of the books that are unrelated to trading are the most valuable. But yeah, so starting off, I'm just going to go into some of the stuff that I want to break down. Starting from the weekly outlook. There you go. So if you guys don't know yet, if you're new, there's this app called Forex Factory. That's what we use right now. I'm actually working on an alternative to this. One where you could like have a dashboard here. It's just a little bit of a cleaner look to the calendar. And you have a little dashboard where you can see the news event and then drop a screenshot of your trade in there so that you can see, you know, what happened after that news event, record some data and have it for future use. I think it'd be a great tool that people would actually use. And yeah, just looking at December 2022 to 28, which is this week, right? Basically the only news events, because it's Christmas holiday. I don't know if every country celebrates Christmas, but this is a USD bank holiday where banks are closed. Yeah, if you guys don't celebrate it, if you're from a country that doesn't, drop that. I'm just curious. Drop it in the chat. But basically you want to look for these days that have a bank holiday or weeks and kind of note for the pair that you're trading, is it going to affect you? So usually during bank holidays, people step away. I mean, this entire month, because it's a bank holiday on Christmas, the entire month people step away from trading. It's known as one of the worst months. And this would obviously be one of the worst weeks for most pairs because it's just going to start consolidating. There's not going to be much movement. And there's only this news on Thursday where we might get some volatility. You don't necessarily want to mess with trading at all. But I'm just going to kind of be tape reading, breaking down how you can still like kind of observe and learn from this price action, even though you might not necessarily be trading it. So as always, I start from the daily time frame. I'm going to pull up my stream on here so I can actually see the comments. Is this live trading? Is this live trading? What a great question. I wonder if this is live trading after what I just said. Why would I be live trading in Christmas week? Come on. We're just going to be watching how the price action moves. I mean, if there's a setup, then I'll let you guys know that, oh, this is a good setup. But there's no point in like getting into a trade that might look good for like maybe 30 minutes and then it just starts consolidating after and you'll never hit your target, because that's what can happen this week. I'm trying to do more mentorships this week because I haven't spent enough time actually teaching students. It's mainly just been trades and live streams, and like people are looking for those trades and aren't really paying attention to what really matters, which is actually learning a model, actually learning how to trade. People come in here and they try to just copy the trades. Like, what are you going to learn from that? But yeah, I was talking to one of my friends recently and he said that like, oh, I work all the time. I literally don't have any time to trade whatsoever. And I mean, he said the only way that he can trade is by taking someone's signal. He's in some groups. And it's like when the guy sends a signal, that's the only time he can get in. But like actually analyzing the chart or whatever. And that just means that you took the wrong approach. Because for me, when I look at the chart, like it takes at most 30 seconds for me to know where it's going. Because look, at the start of the week, usually Monday, Sunday, or Saturday, I do a weekly outlook, right? I already know where it's going to go on the daily time frame for like a week. Like I have this bias, already set bias. And then I also know from experience that when the market actually starts moving is during kill zones or sessions. And during those kill zones or sessions, like it starts moving and there's a specific pattern that it follows most of the time, as long as it's in the right stage, right? As long as we get that fake out move during Asia, we get the confirmation with an IFG, it'll do basically the same thing over and over again. So at most for me, it takes like 30 seconds for me to look at the chart, remember what I marked out at the start of my week. Like I always send out the weekly outlooks. I don't know if you guys can see this. No, probably not. I'm going to drag it over my Discord. All right, you guys should be able to see it now. So I always start off the week by giving a little outlook and what I'm expecting. Like here, we closed above this bullish Reaper, and I was like, okay, we might likely, like this is where we're gonna close, and we might tap back into it before drawing to 2665, which is this bearish fair value gap up here. So I already know where it's going, and all I really need to do is open up my phone during Asia session, enter my trade for like maybe 3 minutes, drag a decent stop loss, and swing it. Like it does not take time. But if you think that, oh, I'm working, I don't have time to trade, then you're never going to learn it, because it's just an excuse that doesn't really have any backing to it. Spend some time to learn, and then you won't have a problem with time, because it doesn't really take that long to place a trade or to analyze the market. Okay, so look at this. The bullish Reaper that I marked out earlier this week, we can drag that out. You can see that the market already came back into it. It's actually a little bit unfortunate that we ended up closing below it, because that shows that we disrespected it. But then at the same time, that's why this range might not be the best to trade, like today's range. It's not exactly clear because, first of all, we disrespected, or we came back and started using this as a Reaper when we closed right here. So now this bullish fair value gap. First of all, we disrespected it with this big bearish candle. This is the first act of disrespecting this bullish fair value gap. We disrespected it, then we respected it once more with this bullish candle, creating a Reaper. And now this bearish candle disrespected it again. So honestly, what I would do at this point is just get rid of it, because it doesn't seem like the market's using it at all. And what I'm going to look for instead is this one down here, which is what happened, right? We just barely tapped into it. We never disrespected this one. We pulled out of it, and this one came back in and tapped into it. The next thing that we're looking for is this fair value gap right here. So here's the high of the fair value gap. Here's the low. So you can see we already filled it completely. And now if we're bullish, as I'm anticipating, then we will run up with this daily candle or tomorrow's daily candle and close above it. Then we could continue to the actual draw on liquidity, which would be this fair value gap right here. And this would be my target, right? Like I already know where it's going to go. Now I just have to come in during Asia session after one daily candle closes up here. Once this happens and I see, okay, we closed above it in yesterday's daily range, right? Because Asia session always starts from the scratch. Like right now, we're about to go into Asia session in an hour. We have a new daily candle. You see this daily candle? It's fresh. It hasn't done anything yet. So every time the previous day closes and Asia session opens, you basically have the expansion of the daily candle happening from Asia session. So basically once a daily candle comes up here and closes right there and Asia session opens up in the next day and there's a fresh new wick right here, a new candle, all I'm going to do is wait for it to come back in here and I'm going to ride it over here. And that's how I trade, right? That's all I trade. It's going to take me like 5 seconds to look at it, be like, okay, we closed above here. Now it closed above here. Now it's going to draw higher. And I'm just going to take a trade once it taps into here, creates that daily wick. You can see that the daily wick right now is really small. Sometimes it comes down and creates a bigger wick. But it doesn't necessarily have to, right? Because when a previous day is bearish like this, you can see that there's a bunch of bearish fair value gaps here. You guys see that? A bunch of bearish fair value gaps. There's one right here, and there's one right here, and there's one right here. Actually, no, there's no fair value gap right here. Okay, so we have two bearish fair value gaps. Now we're looking for this bullish candle. If we, instead of creating a low, tapping back into this thing again, if we just close above here, that's already enough to consider that we're just going to likely draw higher. Then the final confirmation would be closing up here. And that's where the daily range I would like say that, okay, this daily range hit its target already. It's done. I don't have to anticipate any more buy side from this daily candle. I'll wait for the next day to open. You can see we tapped into it. If we're bearish, then we're going to drop lower, tap into it again, maybe clear this low again. So you can't exactly tell anything until you get some more confirmation. And the way that I trade is looking for this confirmation with my already predetermined bias. So this 4-hour candle has 3 hours to close. If it closes up there, I have some confirmation. You guys understanding most of what I'm saying right now? And then remember, we do have that news. So this week is likely going to be choppy. So gold usually always has some sort of momentum because especially around the world, if there's going to be some war or news of war or like the gold mines finally being opened, there's always some factor that can affect gold as the safe haven asset. And usually it moves even during Christmas week. Other pairs like NASDAQ, for example, might be insanely choppy. Like look at this. It's not necessarily doing anything. It's just chopping around inside of this range, right? So you kind of want to also consider what pair am I trading? Is there an opportunity to take trades? And you shouldn't be trading on an account that matters for you. Trade a demo account and simply use it to learn price action during this time. Like you shouldn't be trading at all this month. You can also step away. Like I just saw a video from Dodgy and he was saying like, let's pull it up. He was saying if you are trading during this time, it just shows that you have, first of all, no discipline. Second of all, it shows that you don't have a family. Spend some time with family. Yeah, with Christmas, I have some relatives coming over. We're going to have a little, and some nephews, party at my house. I'm a fool, bro. Yeah, for sure, for sure. But yeah, I'm gonna be releasing the videos that I mentioned right here, 10 videos on our models, one by one. I released the first one today. It's just like a basics covering, yo, can you make money trading? If like where I'm coming from. A lot of people, I was in a call with someone recently and they were like, yeah, I made a lot of money already like investing, and I'm making some money. I just don't really understand like why. I don't understand the market. I don't understand when I'm supposed to be exiting, and they want to learn more. And I realize that's what most people are doing. That's how they get exposed. You have to make some money in the market to kind of get exposed to the idea that you can actually make a living from trading. And then you get in and learn some model. A lot of people, they learn some nonsense like support resistance, and then they end up trading like that. That's why it's important to like have people around you that actually make money from trading consistently, because then you'll be able to trust them. Like I had some good mentors, and they were just like showing me exactly where I needed to start. One of them led me to Casper SMC. Now most of his videos, let's pull up his YouTube channel. Now most of his videos are kind of like,
in this video,
they're kind of like content now. It's not really valuable. It's more like I'm growing on social media. But previously, when I was learning from him like a while ago, because the guy that got me into trading, he said, you need to study ICT. He's like, you might not really, because I was young as well, you were like, you might not really enjoy his content. So here's this guy that I also learned from, and it was Casper SMC. And I started watching all his previous videos, are the kind of videos that I'm making right now, you know, where it's like I'm actually dropping sauce, but nobody's really seeing the video, so it doesn't matter, right? It doesn't matter if you guys are seeing the videos. There's not really enough people to see it. And I'm just doing that right now to grow, to get some exposure, and then I'll probably transition to the same kind of videos he was making. But there's a lot of value in his channel, and that's kind of who I started with alongside ICT. Then I went to ICT himself, and I watched the 2022 mentorship. Playlist 2022 mentorship. Then I loved the 2023, all the tape reading sessions. Like I would just turn it on in the morning and like sit there and listen to this guy just yapping away while the market was moving. Yeah, it's because I'm not on my main account, but I did watch like every single one of these videos. You can also see, or I could pull it up on my phone. I'm not capping. I spent the time, and I did what like you need to do. How do I switch? Switch channels. Like a lot of people, they're always looking for a quick way to do it. Like you're not always going to be able to find the quick way, and you're just going to have to like spend the time necessary and actually learn everything. Spend as much time as possible doing it, because that shows that you're actually dedicated to it. Right here. Every single one of the videos in 2022 playlist watched. It was also like later on, I even went back and rewatched some of the videos, because when I started teaching, I was like, I gotta make sure that I know this stuff exactly, because if I don't, like I'm not really qualified to teach anybody. It's like I could be teaching you guys some random stuff and nobody would know. And that's why I have to like go out of the way and actually make sure that what I'm teaching is right. Okay, if you guys have anything that you want me to cover right now, drop it in the chat. we're just kind of looking at price action. We can go on the lower time frame, mark out some fair value gaps, and watch how they're treated. Remember, we want to aim for this level today, or not today, but in the next few days. We want to see it close above this if we're bullish. Look, it's already consolidating. We're not leaving a range. We're not doing anything like major. There's a fair value gap right here, and there's a fair value gap right here. So this one would technically be an IFEG after, it stayed within it actually. So it wicked down into the lower one and stayed within this one on the 3-minute time frame. You can see all these wicks staying and bodies staying above. Wicks kind of digging into the fair value gap. I should change the color so you guys can see it. Black isn't a good color either. No. Red maybe? Yeah, that's visible. Yeah, so you can see that the wicks are digging into the fair value gap, but the bodies are staying above. That's one of those signs that like, oh, there's momentum towards the upside. There's a lot of like order flow showing bullishness, but this isn't enough to get into a trade. This isn't enough confirmation. First of all, we're still not in a session, right? Asia session's still in an hour. The next thing is, in order to actually get in off of a trade after watching order flow, you'd want to see a move, like a momentum towards the upside, and then you'd want to see a new fair value gap. So if it ran up right now and then created a new fair value gap, and then this would be an order block, then that would be confirmation for a trade. But just this right here is not enough. This is enough to say that, okay, we're getting bullish order flow and we're likely going to go up sometime today. But it's not enough to confirm a trade off of this. In fact, this could still be disrespected, because what this is right here is a bunch of accumulation. There's lows being built up right here. So you either want to see high expansion up here. We want to see the close above this 4 hour. Remember, this is a 4 hour fair value gap. And then you'd be like, okay, maybe there's some room for buy side. Turtle soups or unicorns? What a great question. What a great question. I prefer turtle soups. Unicorn, it's like you're getting in kind of late after the dip happened, right? You swept, let's look at a unicorn. Like this one, for example. After, this is like a really small one, but it does the same thing. So after you swept that liquidity, you get the confirmation breaker block formed, and then the market comes back in, taps into it, and then you run from there, right? Unicorn is kind of getting in late. Turtle soups, on the other hand, as long as you like get it correctly, you can get like a trade like this where it sweeps the liquidity and you know, okay, we're bullish. Like this is actually during a macro right here. $12 or $250 to $310. Look at that. So we swept the liquidity during a macro and then ran up. So turtle soups are definitely way better. And especially if you do turtle soups with a higher time frame narrative, to where you're like, what is the most high probability setup this week where I can literally get in at the low? That would probably be somewhere here inside of like this daily candle, or inside of this daily candle. If it pulls back, that would probably be the highest probability setup this week if we're going to be bullish and closing up here, right? The second highest probability setup would be up here after we close, because after we close right here, look, you may think that you already missed out on this move, but you didn't, because you never got any confirmation. Once you're right here, think about how much more room there is to go, because the only next fair value gap, I guess there's this IFEG right here. This might stop price. So from here to 633, right? After you close above and market starts pulling back into this IFEG, you still have, first of all, to this IFEG, from 2630 to 2645, 150 pips. Okay, so you might get in at 2630 if it pulls back to 45, the low of this fair value gap, that's already 150 pips, which is a lot. One lot, 150 pips, that's $1,500 with low risk. Okay? And if it decides to go up and actually draw into this bearish fair value gap, which we missed last week, then from here, 2630 to 2660, 300 pips. You're not missing out on anything. 300 pips is so much. Plus, you'd have confirmation, and it would be less risky than taking the trade right here. I've been working on my handstand. Let's see if you guys can see. For the first time today, actually, I was able to get up because I only got these like when I went on winter break. These parallettes. So I've just been doing handstands every day until I could like hold it. And today, for the first time, I was able to get out of the L-sit position into a handstand, but I fell and almost like broke my arm. Because it's like once you're up there, if you slip off, you basically have to drop on your body. Because if you drop on your wrist, you could easily snap your wrist. Yesterday's open high-low close. Yeah, look at this. Let's dive into it. Lower time frame. There you go. Only what matters from yesterday. Open, high, low, close. So let's go into the replay mode. Yesterday, Monday, Tuesday. That should be Tuesday. Monday. Okay, there you go. So Monday's range opens at 12. Boom. This is officially Monday, but Monday opens from Asia session. So from Sunday open, the daily candle already opened, right? And we got this move on sell side right here before running up. And we ran all the way to the top of this fair value gap. Clearing it completely. You can see that this is a bearish fair value gap on the daily time frame, the one that I was showing you guys. This one, bearish fair value gap. So we cleared it literally perfectly to the dot before pulling down lower. IFEG created right there, or no, we actually didn't disrespect it yet. Now we did, and then we got that sell side. So you can see if we go on an even lower time frame. Asia range created the fake out leg, the Judas swing, and then London session actually ran from the top of this daily bearish fair value gap to the low. And that was a 2630, 2616, 150 pip move. That's crazy. Then we went even lower from another 30-minute FVG right here. All these candles staying within it. Then we got that explosive move down. And then that's where we started reversing from the daily fair value gap down there. So this one. A pretty solid range. And then we pulled up, closed, new day opens. Best pairs to trade? Gold is definitely the best pair to trade. There's nothing better than gold, because gold is the safe haven asset. It's probably the easiest to predict economically. You can kind of guess what people are going to do, like banks are going to do with gold whenever there's news about it. How can I catch today gold move? I missed it. You don't need to catch today's gold move. In fact, you shouldn't be trading at all. You didn't miss anything. How did you miss today's gold move? You mean like Monday's gold move, this one? Yeah, it's not really a good move to catch. the only confluence that you had in New York was this fair value gap and a low. Like, I'd be pretty sketched out to trade after it swept liquidity. You see how we swept this liquidity? So I would expect a bigger pullback. I wouldn't really like trading from New York session. London session would have been a good trade because, look, not only did we sweep this high, but we swept into this like the very top of the daily bearish fair value gap. And once we started pulling back, I would have instantly known right there that we're bearish because we cleared the daily fair value gap and we swept this liquidity. That's one of my A+ setups where there's a liquidity and a confluence right above it. Boom. And then you get an IFEG, which is what we got right here. So once we closed below this IFEG right here, then you could get in and ride it to your actual target, which would have been this. But I probably wouldn't have traded that, even if I saw it. That's what you're going to do. Turkey and sleep. Turkey on Christmas is kind of weird. What do people eat on Christmas? Cookies? Cookies? I don't know. I guess I'll see what mom makes. My A+ setup goes like this. Like what I showed you. There's a, let's write it down. Marky's A+ setup. First of all, you have to have some liquidity to the left. So some high or low. And next, right above or below that liquidity is a FVG or confluence. And then the last thing is confirmation, which equals an IFG. So this is my setup right here. And how it looks, if you draw it out simply, is there's this high created. And then say there's a daily fair value gap right here, or daily IFEG, and market barely runs up into this. Then when it runs up into this, you have three confluences. First of all, liquidity. Second of all, daily fair value gap. When you pull back, you get the third confluence, which would be an IFEG inside of this fake out leg. When you get that, that's 1, 2, 3 confluences. That's what ICT teaches. You have to have 3 confluences before you take a trade. And you just take that trade from the IFEG to the liquidity, and then all of a sudden you have a breaker block. Look at this. You take profit and you let the partials ride from the breaker block if it's bearish, and you have a 5-step trade right there, which will continue going. And then the most important part of this A+ setup is that it happens during Asia session, because that's the session that I trade. And the fake out leg creates the daily wick. So if we portray the daily candle to the right hand side, how this would look on the daily candle would be like this. You have a daily candle. Let's add one more. Boom. So this is the open. Created some high. The next thing is the wick being created. So this is the open right here. And the next thing is a wick being created. And the wick digs into the daily fair value gap above. And then the body begins to expand towards sell side. And it expands all the way down here towards sell side before hitting some other target. You close your position, the daily candle closes, and that's your trade. This is my A+ setup. Both sides, same thing. As long as the bias is correct, this will repeat. As long as it taps into a daily fair value gap. And if Asia session simply doesn't have anything above or below, I won't trade it because it's not my setup, right? There's nothing to trade. And that's why sometimes with VIP, I just really don't trade. I send out, this month I haven't been trading much because I secured 2 payouts. It's $5K month during one of the worst months in history. So I was happy, and I just kind of told them I'm not going to be as active because I'm already done trading. I'm doing great. If you guys want to trade, go ahead and trade, but do it on demo or an account that you don't care about. Might as well write down, if no daily FVGs around open, simply don't trade. Bias is the daily fair value gaps. That's all it is. It's daily fair value gaps. There's a daily fair value gap above. There's a daily fair value gap below. It'll draw from one fair value gap to the next. If there's a fair value gap that hasn't been filled yet, it'll draw to it. Why do you think I'm aiming for the daily fair value gap right here? Why? This one. Right up here, 2665. Why do you think I'm aiming for that? Because market has not touched it since it's been open. It touched this one, it touched this one, touched this one, touched this one. After running into this one, the only other one that hasn't been touched yet is this one. And all of a sudden, there's this huge explosive move towards buy side. Why? Because it wants to go fill this one. That's bias. It's easy. The reason why people suck at bias is because they never go higher than their 15-minute time frame. No, it's not hard for you at all. I think you're just overcomplicating it for yourself. If you learn what a fair value gap is, which you probably don't know what a fair value gap is, or you don't know how to mark it out. Because look, if you know what a fair value gap is and you go to the daily time frame, just like I've been doing, and you mark out the daily fair value gap right here and the next daily fair value gap, because there's only 3 fair value gaps right here. There's one down here, there's one up here, and there's one right here, right now. Those are the only fair value gaps other than IFEGs, which we're not looking at. We're only going to be looking at fair value gaps right now, okay? Let me get rid of all this. Okay, we're only looking at fair value gaps. How is this difficult? Because I know how to mark out fair value gaps. If it's difficult, you probably don't know, and you should start by just watching like 10 videos on fair value gaps. Look, there's one right here, there's one down here. If all of a sudden the market's bullish, which means it's drawing up here and it closes above this fair value gap, then it wants to go for this one. So what am I going to do? I'm going to wait for Asia session to open. Asia session is going to go down. And if it goes down when it really wants to go up here, then this move that goes down is probably going to be literally the bottom of the move. So I would literally get in at the bottom because I know this is the highest probability setup. Because down here, it already tapped into it 8 times. 1, 2, 3, 4. This daily candle might tap into it, right? It already tapped into it so much times. Then this one, which hasn't been touched at all, will likely be the draw on liquidity. This one as well, the IFEG. Like I said, this might be the point where it stops and continues going lower. So this is the draw on liquidity. It's easy. There's 1, 2, 3 fair value gaps. This one, it's already in this fair value gap. So now it's going to draw to the next fair value gap. And how do you confirm that is by using IFEGs. After you get the confirmation, then you could trade to the next fair value gap. If you close above this one, then it's likely going to draw into this one. If it starts consolidating a few days, start closing in this one, then it's probably going to go lower. If it digs above it like this, then it pulls back, but then it digs above it again and closes above it, then it likely wants to go even higher, and then you could aim for the next fair value gap. So you mark out the next fair value gap, which has yet to be disrespected. This one right here touched one right here once, twice, 3 times, 4, 5 times, but none of them closed above it yet. So it could still draw into this one. So if we close above this one, then the only next draw on liquidity would be this one. If the market starts moving up, then I know that it wants to go up here. If it taps into it and starts pulling back, then I'll aim for the next fair value gap, which might be one of the fair value gaps that were created in this move or in this bullish move. If it closes above it, I'll be aiming for the next fair value gap, which has yet to be touched, which is this one right here. How is that difficult? It's not. It's not difficult at all. Right? You have the daily bias, then you go in on the lower time frame and you use your little model, which is the A+ model right here that I have. Daily fair value gap, taps into it after sweeping a liquidity, creating a daily wick. Confirmation, IFEG. Trade from the IFEG to the low. Boom, you already have your trade for the day. Close the trade, go into the next daily range. Next daily range, pulls down in here, closes, next daily range opens, it sweeps the low right here, then it creates a IFEG, and then you could aim for the next fair value gap, which could be the midpoint of this one. Because look, if it runs from the low, then the midpoint is still left right there. You guys get it? $30-minute fair value gap right here. If it pulls up and closes above this one, we're obviously going to be moving higher. If it closes below this fair value gap, it's going to be bearish and it's going to move towards the next fair value gap, which is right here. That's all you need. You don't need anything else. And if it draws into this fair value gap right here, it would be creating a new daily wick. And if it stays within this fair value gap, then I'd be bullish from here and I'd aim for this. That's a trade for the day right there. So if it closed below that, obviously in optimal circumstances, like it might just not do it just because it's a terrible week to trade. But if it trades below it, stays within this fair value gap, then I'd enter the trade, aim for the fair value gap right here again. How long have I been streaming already? Like 40 minutes. All right, it's time to do some exercise, guys. Let's see if I can do the handstand now. This is like another goal. Like you have a goal in trading. In order to be successful, you have to have multiple goals. And you have to have these smaller goals that you can do so that you can be confident in yourself. You can say, I'm someone that achieves what I set my mind to do. And even if it's some little things. Yeah, that's so hard. So hard. But I'll do it in no time. If you guys have any requests, drop them in the chat. I'll do that right before I end the stream. But I'm probably going to do that soon. I'm going to go eat something. Fire. Remember, just because it's bullish right now after closing inside of a fair value gap doesn't mean that you can get into a buy. You'd want to see it pull up and then close. And then you could be like, okay, now I could go in for a buy. But until it does that, it's probably not going to go up because it can pull down still. This 30-minute candle has 30 minutes to close still. You'd want to see it pull up, disrespect one of these fair value gaps right here. Like this one, for example. then it would be an IFG, then you have confirmation, right? Remember, tapping into a fair value gap is just the first step. The second step is confirmation. And then you have to have another confluence, which would be time. In 30 minutes is London session. If you want to learn more, feel free to hop into my premium. It used to be $50 a month, but it just like, I didn't really like the fact that, I wasn't getting much out of it. Like, I love to teach, and I'm going to do that in these streams, right? But when I'm charging for something, like, I kind of have to put in a lot of effort into it, and I just couldn't do that with what I was charging. Like, me and Christian, we just were like, it's not even really worth it. We're not spending enough time with our students. We were kind of sending out trades and occasionally doing live streams. And that's all that we were doing for them, which just wasn't enough. So what I decided is I'm willing to sacrifice what we have, obviously getting less students, but being able to spend more one-on-one time with them. Like actually hopping in one-on-one calls, spending one-on-one time educating them and specifically learning what people's like problems are. That's way better for me than having a bunch of people and not being able to spend one-on-one time with them because, I don't know, I just don't feel like it's valuable for me. And then obviously, as just being in the free Discord, I'm going to continuously send out videos like this. This is the first one that I made today. But yeah, if you're interested, shoot me a DM, ask me more about what I'm going to teach you. Tell me more about what you're struggling with, and I will work with you from there. Yeah, that's it. Feel free to check out our Instagram page if you haven't already, if you're new to the stream. I'm going to be ending the stream here. Yeah, keep an eye on Asia session. Learn what it does. But I'm out of here. Thanks for hopping.